It is an immense honor to have with us today the Honorable Minister of Finance and Corporate Affairs, Government of India, Shri Arun Jaitley ji with us for this BRICS seminar on investment flows, challenges, opportunities, and road ahead. It's also an honor to have Honorable Governor, Reserve Bank of India, Dr. Urjit Patel ji, and respected Chairman, Securities and Exchange Board of India, Shri U.K. Sinha ji. Shri Saurabh Garg, Joint Secretary, Ministry of Finance, would say a few words in welcoming the Finance Minister.
Honorable Finance Minister, Governor RBI, Chairman SEBI, Deputy Governor RBI, and assembled delegates for this conference. The Secretary Economic Affairs was supposed to be here, but his flight got delayed by 2 hours, and therefore I'm a poor substitute for him to give a welcome address. Just to give a brief background to the distinguished panelists today. This is the last of the BRICS seminars that has been arranged during the presidency of the India as the president of BRICS. Over the weekend, we have the Leaders Summit. A number of seminars, a number of events had been held over the past few months leading up to this Leaders Summit. Today's events focuses on investment flows, and we are looking at investment flows in their totality in terms of debt, in terms of portfolio, and equity flows, and also the distortions that are caused by the low tax jurisdictions. We hope that the discussions that we have today would lead on to setting the agenda for the BRICS and other international fora as we move ahead. We have participants from the different BRICS countries and of course a large number of participants from India. And on behalf of the Ministry of Finance, the Reserve Bank of India, and the Securities Exchange Board of India, a warm welcome to all the delegates who are here and look forward to fruitful deliberations today. Thank you.
Thank you, sir. On behalf of the organizers, that is Department of Economic Affairs, Ministry of Finance, Reserve Bank of India, and Securities Exchange Board of India, I request Honorable Governor Dr. Urjit Patel to hand over a memento to the Honorable Minister of Finance and Corporate Affairs, Shri Arun Jaitley ji. Thank you, sir. I request Chairman SEBI, Shri Sinha ji, to give his address.
Honorable Finance Minister, Shri Arun Jaitley ji, Governor Reserve Bank of India, Dr. Patel, Deputy Governor Reserve Bank of India, Mr. Gandhi, delegates from BRICS countries, invited guests, ladies and gentlemen. I'm privileged to be here today on this most powerful gathering representing more than 43–44% of the world population and a GDP of more than $16 trillion. We are one of the fastest growing economies put together in the whole world. And we have a very strong presence and a very strong role to play in the global arena. While there were some hiccups in the growth prospects in the last 3–4 years, recent trends are very encouraging. And when one looks at the latest IMF report about forecast of the global growth, one finds that so far as the BRICS countries, all of whom we are here today, we have some good news to share. On the one hand, while the forecast between the April 2016 and that for October 2016 by the IMF is concerned, the latest forecast has a slight decline in the global GDP growth. But so far as the BRICS countries are concerned, as a group and individually, we are seeing a positive change between April and October forecasts. So this is something which, and even for 2017, the forecasts are very encouraging. So my feeling is that whatever were the problems for these groups of countries, those problems are now behind us, and all of us together can play a very important role. It is also encouraging that so far as the rest of the world is concerned, while the growth projections and growth forecasts have some issue, but so far as we are concerned, we have come together and we have been able to show that by coming together we can have agencies and institutions like the New Development Bank, which shows that after the commitment at the highest political level, our groups of countries are ready to work together to remove poverty, to help each other in the growth prospects of the region and also for the whole world. Today, if we look at our working together, our individual economies, we find that most of our cooperation is through the channel of trade. Although even in trade, a lot remains to be done, and there is a huge potential to be tapped. But so far as the flows are concerned, we find that the flows into the BRICS countries have gone up by more than 3 times between 2011 and 2012. From 6% of the global flows, FDI inflows, it has gone up to 20% into the BRICS countries. If we look at the outflows from the BRICS countries, it has gone up from 1% to 9%. However, when we look at the outflows from one BRIC country to another BRIC country and the BRICS countries as a whole, then we find that a lot of ground has to be covered. So I'm very thankful to the organizers, especially the Ministry of Finance, that this particular seminar has been organized only to discuss the capital flows, the flows amongst ourselves, and what are the huge potentials that we can have. I would also like to say that the amount of reserves which these countries have, more than $4 trillion, there is scope of better cooperation, and I'm sure something is in the pipeline. More than 2 weeks ago, we had another seminar for the BRICS countries on corporate bond market. And one of the things which emerged in that seminar was that now the stage has come for us to start planning for active cooperation, for example, in areas of developing a BRICS bond market. Some of you might be familiar that more than 10, 12 years ago, there was a talk of developing an Asian bond market. For some reason, that couldn't succeed. But if we are talking of fund flows, it is important that we start looking into the nitty-gritty of how to develop an BRICS bond market. So far as our own individual systems are concerned, I think by sharing information, by trying to know what each other country is doing, we have a lot to learn from each other. For example, in areas of how foreign portfolio flows are covered, what are the systems of settlement, how the trading happens, what are the requirements for a foreign investor to come and invest from one BRICS country to another BRICS country. And I'm sure that once this happens, we start sharing that information, there will be a lot of learning, and perhaps it will also bring about opportunities for more and more cooperation. Talking about India, I would like to say that so far as the foreign portfolio investments are concerned, a lot has happened in the last 3 years, and we have a completely new set of foreign portfolio investor regulations. The system has been made very simple. The registration process is simple. A foreign investor can bring in and bring out money as and when he or she wants. So lot of nitty-gritty has been handled, lot of details have been worked out, and we have today, for example, close to 9,000 foreign portfolio investors who are registered. We will be happy to share our knowledge, our experience with our partner countries, how the foreign portfolio investors regulations have fared in this country. I'd also like to mention that we have recently come out with guidelines for real estate investment trusts and infrastructure investment trusts and municipal bond market. And these are areas where, again, I think all the countries in the BRICS region can learn. We can also learn from our partner countries and vice versa. So there is a need to set up some mechanism that we start exchanging information and learning from each other's experience. Talking about portfolios flows, one thought which comes to my mind is that going by global stability concerns, going by the concerns of investor protection, it is very important that the foreign investors have the assurance that there is good amount of corporate governance in that country where they're investing. I'm happy to tell that last 3 years have shown a very good growth and progress so far as corporate governance is concerned in this country. The new Company Act was passed in 2013. SEBI has come out with a large number of regulations, and these regulations have been very well appreciated across the world now, including a ranking by the World Bank. So I would like that we are able to share these developments with our counterparts, and we can set up some mechanism for us to work together in the area of corporate governance as well, because without corporate governance being of an acceptable level, it is quite unlikely that foreign investors will take interest in investing in any jurisdiction. So that is an area which should not be neglected. I would also like to inform that in the Global Forum of Security Market Regulators, that is IOSCO, India is in the executive committee, and India plays a very important role there. We have China also in the IOSCO executive committee, but I would like to offer that all the securities market regulators of the BRICS countries, we can set up some mechanism to work together and learn from each other's development. I think a lot of regulatory progress can take place, and it is mutual. It is for the benefit of all of us. So I would hope that this seminar brings out some issues about portfolios flows and also offer some suggestions. And I'll hope that we are able to work out some mechanism to carry forward the message of this seminar. Thank you very much.
Thank you, sir. I request Dr. Urjit Patel, Honorable Governor, Reserve Bank of India, to deliver his address.
Distinguished delegates and friends from the BRICS countries, Honorable Finance Minister Shri Jaitley, Chairman SEBI, Shri UK Sinha, my senior colleague Deputy Governor Gandhi, ladies and gentlemen. I'm deeply honored to be invited to speak at this seminar co-hosted by the Government of India, SEBI, and the Reserve Bank of India in preparation for the 8th BRICS Leaders Summit scheduled for Goa this coming weekend. It is heartening to see how rapidly and diversely the BRICS community has grown, and not just in size, but also in stature. From being just an idea, literally on a piece of paper back in 2001, we have come together undeterred by geography, drawn to each other by non-interference, equality, and mutual benefit towards common goals and challenges. Such a mobilization of intellect, effort, and resources for economic development and welfare is perhaps unprecedented in terms of how much we have achieved in these few years. It was mentioned that we account for about 1/3 of the world GDP in terms of purchasing power parity, but we also account for 17% of world trade, and according to UNCTAD figures in 2015, we account for 15% of foreign direct investment flows. In times when both trade and industry are stalling and extreme bouts of turbulence periodically roil global financial markets with real economy spillovers, the BRICS nations offer to the world a vast pool of investment opportunities in terms of sectors, companies, and people with high personal income growth potential. We will post the 5 BRICS countries a growth rate of 5.1% this year, which overshadows not only the 3.1% for the world, but also 4.2% for the EMDEs in general. The BRICS economies are either expected to post current account deficits or reduce surpluses, thereby providing vital support to anemic global aggregate demand. The investment GDP ratios in our countries range from about 19% in Brazil to 45% in China, attesting to the strong appetite for creating new avenues of aggregate demand. There are 3 challenges against this backdrop. 2 are well known, and I will elaborate on the third one. The main challenge to energizing investment in our economies is the now eponymous risk of global headwinds. I'm not going to say anything more on that because it's well known, but it stays there. Second is the management of spillovers in view of the uncertainties injected into the business climate and prospects for returns by bouts of financial market turbulence, usually on account of policy uncertainty from the systemic central banks of the world. The third item, which has now entered the lexicon, is that of political risk. Potential unconventional sources, such as the black swan type of events like the Brexit vote, the US presidential election process, and the political realignments towards the fringes, left or right, in Europe. These have blipped on our radars and affect our policies going forward. Our monetary authorities, as in the BRICS countries, are particularly besieged since inflation, interest rates, exchange rates, and levels of reserves are some of the main variables that influence country allocations in foreign investors' portfolio decisions. Consequently, even though the sensitivity to spillovers has waned, managing them claims non-trivial resources and policy attention. In 2016, we have had umpteen times when capital flows to emerging markets flowed and ebbed from the beginning of the year, Brexit, intermittent Fed speak, etc. In this difficult international environment, there are 3 other challenges that confront us and also convey lessons from the recent experience. First, with current account deficits and surpluses low and set to narrow, our economies seem to be reflecting lack of absorptive capacity and the wherewithal to convert capital flows into investable resources. This is incongruous in the context of ultra-low cost of overseas finance, especially in mature markets, and the availability of large pools of footloose capital driven out to seek returns. Second, we need to manage commodity price cycles better. The modest firming up of commodity prices in the first half of this year alleviated some stress among net commodity exporters and shaved off some of the terms of trade gains accruing to net commodity importers. The outlook for commodities, however, generally remains soft, and so we must work on mechanisms that even out large real economy effects over the duration of the cycle, so that in the net, our economies are not worse off. This seems to be a potential area of collaboration of mutual benefit and interest amongst the BRICS countries. Third, each one of us needs to work hard to improve the business environment in our economies so that investment is attracted and put to work. We have regarded our structural constraints as impediments to faster sustainable growth. In the new global economy, I would instead be tempted to describe them as investment opportunities. The new economy is opening up gaps in skilling and reskilling, or in other words, pointing to higher investment in human capital formation. Public investment has a key role to play in this regard in identifying investment opportunities and partnering private investment. Country experiences may themselves yield a wealth of learning. India has taken several initiatives aimed at consolidating public policy efforts for skill building and supporting self-employment through Startup India, Digital India, and Make in India. Implementing structural reforms represents an opportunity and a challenge. Here, economics inevitably encounters the reality of political processes and their attendant vicissitudes, as we have found it in India. But they're essential to boost trade and investment by reducing supply chain rigidities, encouraging scale economies, cutting down transaction costs, and promoting efficiency. The anchor for these structural changes has to be domestic macroeconomic stability, as we have all learned from our experience. Price stability, fiscal rectitude, and sustainable external accounts. And in this regard, we have all made measurable progress. Can we envisage a common BRICS investment platform that pools country experiences in improving the environment for investment, identifies investment opportunities in each of our economies in a complementary rather than a substitutable manner, in which others have a comparative advantage and experience in investing, builds institutional structures that facilitate and channel investable resources in a viable manner. Our institutions are young and flexible, so I think that is possible. Alongside, the platform could address regime issues such as the use of tax treaties for treaty and tax shopping, arbitration of disputes, easing of doing business, and boosting investment relations amongst our nations. Finally, as these initiatives take root and yield dividends, we could conceive of using it as a conduit for BRICS investment in other developing countries for promoting sustainable development. I leave you with this thought and wish you all success in your deliberations. Thank you.
Thank you, sir. Thank you for elucidating the policy challenges both for the fisc and the regulators for managing capital flows. I humbly request the Honorable Minister of Finance and Corporate Affairs, Arun Jaitley ji, to deliver the keynote address.
The Governor of the Reserve Bank, Dr. Urjit Patel, Chairman of SEBI, Shri UK Sinha, the Deputy Governor, Shri Gandhi, distinguished delegates from the BRICS countries, ladies and gentlemen. As the Governor just now pointed out, as to what emerged as only an idea in 2001, with regard to the prospect of the BRICS and its ability on a future date to compete with or even overtake the developed world, has now taken a concrete shape. Over the last few years, heads of government, different representatives of the BRICS countries have been periodically meeting and expanding the areas of cooperation with each other. We now have a BRICS institution in the form of the new development bank, which is in existence. And in a remarkably short period of time, it has initiated a large number of its own projects which it is funding. The contingency reserves arrangement is now in place. And there is going to be a prospect of increased cooperation at the level of customs and taxation. We have several other items on the agenda which we have put forward, which are still at the discussion stage in form of a rating agency or a BRICS research institution. And the periodicity with which we've been meeting, we met last week in Washington, this evening and tomorrow the finance ministers and the representatives of the finance departments would be meeting in Goa, and thereafter, 2 days from now, the heads of government would be meeting. This increased cooperation is now taking shape. The BRICS countries have their own challenges. Together they represent a very large part of the global population, more than 40%. They represent a very large part of the global GDP and a significant part of the FDI flows from each other. In terms of the challenges which we faced in the last few years, our experiences have been different. There are countries which are oil and commodity producers and exporters, and therefore, on account of the low price regime, they had their own challenges. But the latest estimate seems to be indicating that even Brazil and Russia this year get into the positive growth scenario, notwithstanding these challenges of the low prices that they've faced in the last few years. And hopefully, as they get out of this scenario, the investment flows themselves would also improve upon. Over the last 2 months, we've had a series of preparatory symposium, seminars and discussions on subjects of mutual interest to each other. Just a fortnight ago, with regard to the capital bond markets, we had a session in Mumbai. We had started off in New Delhi with a session on arbitration and a possible BRICS arbitral center. We had also had a session on discussing our experiences of the public-private partnerships, particularly with regard to our infrastructure projects, a symposium which was widely attended and held in New Delhi. Our experience of the last few years shows that we've started learning from the experience of each other. And in India, of course, the series of steps that we have taken in this regard have helped us in investment flows. Public investment, of course, has had a very important role to play as far as India is concerned. But with regard to investment in particular, as far as the foreign direct investment is concerned, there were several sectors which were either not open or where the sectoral limits were extremely limited. Over the last 2.5 years, most of those sectors have been reviewed. And we now have probably one of the most open FDI policies, which has resulted in bringing large flows into India. We had a comprehensive review as far as different sectors is concerned, and we looked at some of the conditionalities which we used to impose on each of the FDI sectors. And wherever it was considered unnecessary, some of those conditionalities were removed or waived off. Many sectors have been brought into the automatic route. And now we don't have any illustrations of cases pending indefinitely before the FIPB. In fact, in our recent meetings and bilaterals that we had in Canada and the United States, the Secretary of the Department of Economic Affairs, who couldn't make it because of a late flight, and I were pleasantly surprised when some of the investors told us that now when they've tried to come and push for early permissions, they've just got a response that this is not required because in the normal course, it doesn't take any unnecessary time itself. 90% of the FDI coming into India today is on the automatic route itself. This additionally has been aided by the fact that a large number of policy changes which have taken place have added to the ease of doing business in India. Our ranking both in the ease of doing business as also in the global competitive index has moved up significantly in the last 2 years. And this has been aided by a large number of policy initiatives which have been taken by the Government of India. I think what is extremely important is to note that not only are these changes taking place, but every significant decision which has been taken is aimed in one direction, that is to promote economic activity, to make it more investment friendly. And the result of that is obvious. I think the other silver lining seems to be that the states have also become extremely competitive. And therefore a large number of regional governments in India are also becoming increasingly investment friendly, and each of their proposals is intended to attract investment and make themselves more and more competitive. We in India have learned that notwithstanding the fact that there is a contraction as far as global flows are concerned world over, at least by domestic reforms, we can to a large effect neutralize the impact of otherwise a global slowdown itself. I do believe that there are trends in the world today which on the surface do indicate that the world is increasingly moving towards, at least that part of the developed world is moving towards protectionism. These worries are real. And they are real because of the fact that if developed countries see a trend of protectionism, the spillover impact of those policies on other parts of the world could be extremely adverse. Brexit was repeatedly referred to, but I was extremely pleasantly surprised with the analysis which participants in the economy and those managing the economy of the United Kingdom now had an analysis to give. When we met them and also in their presentations they said, please do not interpret it as any form of protectionism because our attitude towards and our policy towards open trade would continue. Don't confuse taking back control with restricting trade. The nature of decision making will be different, but the openness to trade will remain. The other illustration which was mentioned is the tenor of the debate going on in the United States of America. I think the fears are real because it's increasingly becoming more and more protectionist. But as a participant in democratic elections, my own experience has been that some statement made during the elections, the burden of governance suddenly subsequently brings about a change. It's happened in the elections world over, including the United States in the past also. The tenor of the debate is more protectionist during the elections and much less once you get back to business as usual, and therefore we'll have to keep our fingers crossed this time and hope that the tenor of free trade returns back once the heat of elections itself is over. I'm sure the experience of today's seminar itself amongst the BRICS nations and what we are going to be discussing from today evening onwards in Goa, ultimately resulting in the Conference of Heads of Governments and the policy declaration which will come thereafter, will go in the direction of promoting much greater trade between the BRICS countries, much greater flow of investments between each other, and also flow of investments from other parts of the world into our policy itself, because there is still a lot of infrastructure gap which a large number of our BRICS countries still have to fill up. I'm certain that today's proceedings, in the course of the day that we have in Mumbai and thereafter in Goa, will be extremely fruitful in this regard. Thank you very much.
Thank you, sir, for highlighting the increased cooperation between the BRICS countries and the new items of agenda before us that would make BRICS a powerful economic forum. I request Shri R. Gandhi, Deputy Governor, Reserve Bank of India, to propose a vote of thanks to the Finance Minister.
Good afternoon, everybody. Honorable Minister of Finance, Sri Jaitley, Honorable Governor, Reserve Bank of India, Dr. Patel, and Honorable Chairman SEBI, Sri Sinha, and the distinguished delegates from the BRICS nations and various representatives of the various financial institutions here, and my colleagues from the Reserve Bank of India, Government of India, Ministry of Finance, and the SEBI. A warm good afternoon to all of you once again. It's often said that actions speak louder than words, and the Finance Minister's presence here on the run-up to the 8th BRICS Summit is eloquent testimony to the importance accorded by the Government of India for this whole series of seminars and other discussions that we have. Sir, you have highlighted the importance of the BRICS nations' cooperation, and you cherished a wish that BRICS nations will form a BRICS, its own rating agency, and also an arbitration center for BRICS nations. I am sure that in the deliberations today and in the days to come, all our nations will work towards establishing these two institutions. Thank you very much, sir, for your time and your guidance. You have been continuously guiding us in these efforts, and we hope that you will be guiding more in the days to come as well. Governor Reserve Bank of India also has, in his address, specifically mentioned about the challenges that BRICS as a nation, a set of nations face, and specifically he highlighted the need for looking more closely at the risks that we have, the global headwinds and uncertainty in the financial market and the political risks. Chairman SEBI had highlighted the inter-BRICS flow that needs to be taking place among the BRICS nations, and BRICS bond market development also he has been coding. Thanks to both of you, sir, for your time and be with us. And my thanks to all of you who have assembled here at our request, and I'm sure that you'll all be participating more effectively during the rest of the day's discussions as well. Thank you very much, one and all.